Okay guys, so in this video we're going to talk about vector candle recovery, PVA candle recovery. It goes in line with the previous video about liquidity zones, which you still see on the chart. All right, here's the principle behind these PVA candles or vector candles. All right, so the red and green candles, what they signify is there's a 200% or above average volume compared to previous candles. Okay, so those are very high volume candles. All right, so when you put that into context with the fact that the market makers or exchanges, okay, the ones that provide the liquidity for retail to make trades, have to fulfill their obligations, which is to provide that liquidity. Okay, so when there is high volume to the downside, retail traders are heavily selling, okay, or going short or selling. So market makers have to fulfill that liquidity obligation, and they do so with the opposing order. Okay, for every long there's a short, short there's a long, buy there's a sell, sell there's a buy. Okay, so as retail is heavily going short or selling, market makers are again fulfilling that obligation with opposing orders. Someone has to be there to buy when retail is selling. Okay, so as retail is shorting, market makers are filling long positions. They are buying. And the opposite is the fact to be true on the green candles. As retail is heavily buying, okay, market makers are fulfilling that liquidity obligation by selling to them or shorting. So retail is going long. Market makers who provide liquidity, the exchanges, are filling short positions. Okay, so in that context, we anticipate price to come back down to recover those candles and close out those positions. Okay, market makers are not in the business of losing money. They provide liquidity. Okay, now as far as recovery, sometimes the candles are recovered immediately the next candle. Sometimes they're recovered weeks or months later. As we have seen this cycle, we have just recovered previous candles up to the 56K mark that were from May. Okay, but we use these candles to identify probable trade direction. As you can see, a majority of the candles are recovered shortly thereafter within the session. However, like I said, there are some that do not get recovered till later, but we use those for our advantage. Not only do we use those, all right, for areas that price may revisit to recover, all right, so we use those for our take profits because we know these facts. All right, so for instance, we are short from the highs right now. I am short from the high. All right, I was short yesterday, hit my take profits. Okay, price came up, stopped me out, and I had to short this morning. Okay, so I have a late short on the retest to the 50 EMA, anticipating a continuation to the downside. Okay, head short. We are still long from earlier. Okay, but as far as the short position, we now have targets for take profits. All right, when we see the scope of the move. So in these videos, we'll start to incorporate some of the things we talked about in previous videos to put the strategy together slowly each video. All right, so we have our previous low and we have the swing high. Okay, swing low to the recent high. All right, and we see that the scope extension lines up at this point lines up exactly with the recovery of the previous green. So on this short positions, people who are short in this area, okay, we would look to take profits at these subsequent levels. Without even looking at the daily, weeklies, the VWAPs, we can understand to take profit levels at these various levels, because not only do we anticipate price coming down to these levels to recover the previous green candles, but these are also levels where there is likely to get a bounce of support and then can come back towards our entry and invalidate our trade. Doesn't mean it will, but we're trading probability. So when we short, we want to take profit at the support levels because those are the levels most likely to get a bounce back towards our entry and invalidate the trade. All right, but we use that added confluence. All right, there's no coincidences in the market. There are no random pivot points. Everything is controlled. All right, so we would use these for take profit levels. All right, we also use those for extension from the moving averages. All right, that's how we put the strategy together. When we see price extended from a moving average, we anticipate price to return back to the moving average, and then we use these vector candles to determine where price might go. And we see today is playing out so far exactly as we would plan. extension away from the 50, forms your first lower high, M pattern, however you want to call it. All right, and then drops down to the 50, break, retest, looking to continue to the downside. All right, already recovered this vector candle here. Where's my line, arrow? Okay, already got this candle here, recovered, came into those buying imbalances, green candle, previous buying imbalances, which was the retrace back up here. Okay, if we come and draw our local scope levels, what will we see, right? From the swing low to the swing high, okay, we will see the scope extension. Oh, that's the wrong one. Yep, there it is. We'll see the scope extension lined up with the recovery of this vector candle. All right, and our first area of support after the break on the 50. The support, retest, possible continuation to the downside. All right, when we start to throw in, I mean, we can clearly see the pattern here. I don't have to draw it, but we understand there's now a consolidation pattern, right? We see the consolidation pattern. Again, I don't draw these or trade these, but I use them for confluence. Okay, this could be a continuation pattern. Drop, retrace, drop, retrace, drop, retrace, continue down. Okay, that doesn't mean that's going to happen, but we add those in. Everything's for confluence. Okay, we see the scope of the move. It broke and retested resistance. Coming back down to retest for the third time, the scope extension. If that were to break, what do we see? 200 EMA, daily open, lined up with a recovery of the rest of the green candles in this area. All right, so on this short position, okay, we would look for these for our take profits. Take profit 1 at the 50, take profit 2 at the scope extension with the previous candle. Okay, what does that add up to if you took a position from the high? The 50 would have got you 2% without leverage. For me, that would have been a 30% gain. Hitting take profit 1, depending on how much I want to take, I could have locked in 25%, which would have been 8% move. Okay, locked it in. Coming down, hitting take profit 2, almost 4%. So at that point, I'm up almost 60%. Could then take another 25%. I could take more. Okay, and then looking for maybe a third take profit on the retest of the daily open. Leave the remainder of the position in, and hopefully price continues down. All right, that's how we use these liquidity zones, guys. Then we break down to the lower time frames. Okay, take a look at ETH, for example, today, right? Perfect example. Price came up. We had the previous green candles. All right, let me move this back. Okay, let's take a look at the price action with the candles, right? Green candle comes in, quick wicks down, recover. Support at the 50, pin below, close above. Green candle left behind. Green candles all the way to the upside. Wouldn't you know it, price comes all the way back down to recover the green candle, right? Then we add in our levels. What level was that? Scope extension of the move. Swing low to swing high. Okay? On the lower time frames, we could see it as well, right? Comes to the scope, which is lined up at the 200. Breaks below, retest resistance at the 200 and the scope lined up together, and continues down to recover the green candle, leaving behind red candles, right? So we then looked for a hedge long position. Okay? What do we see? Price comes up into the scope, double bottom into the scope, continuation to the upside to recover all the red candles into the reverse scope extension up here, and then comes down. Again, we're adding things into the strategy, adding things from the strategy, sorry. Okay, comes down. If we use the wick here, all right, even if you didn't use the wick, it's the scope, forms the lower low, drops down, scope extension to recover the previous green candle, and now looking to head back up. Okay, and you can see the consolidation triangle happening, right? So when we use our next reverse scopes, where does that put price? Price could come back up here. We got a little purple candle in here. It's not red. Okay, could be a little liquidity in there, right? We could see price do what? We can anticipate possible price action. We could get a rejection in this area. Then we know there's a green candle here. We could come back to the low to recover the previous green. Okay, and once again, that would just be a retest of the scope extension of the move for the third time. And then we look here. Here it is, scope extension of the move. Okay, this is just this. We're just looking at it on the 1 minute time frame. And while we were on the 1 minute time frame, when we're on the 15, we're just seeing candlesticks come in. We don't have any context. I dropped to the lower time frame to see the context. Okay? Sorry, dropped to the lower time frames to see the context. Okay, actually that was Bitcoin. Let me go down to Ethereum. Okay, same thing, right? We see the symmetrical triangle underneath, recovery there. All right, scope extension of the move. We go to the lower time frames and we understood why price is making this reverse, why price is making this consolidation pattern. All right, reverse scope of the move lined up with previous red candle. We could anticipate price coming back up into this zone. Okay, like I said, coming back up into the zone. Get my path out. Okay, back up into the zone, recover the red candle, and then come back down. Okay, whether it forms the high or low there or not, we don't know, but we see the consolidation pattern. Okay, oh, sorry, wrong coin. All right, back to Ethereum. Sorry, guys. So we see the consolidation pattern. Okay, lower highs equal lows at the scope extension. 1, 2, 3. A fourth hit down there would just coincide, okay, with the recovery of the green candle that we anticipate. All right, somebody was asking me, they said they had long the scope here. I pointed out, please be mindful of the green candle left below. 5 minutes later, notable volume, red candle. Trap shorts, recovers previous liquidity into a support, red candle into a support, and takes off back above, retests structure here, coming back above the scope extension and continuation up. All right, but when you go to the lower time frames, you can understand probability of trade direction. When you're long in this position, you know there's green candles to be recovered. Okay, so you look to take your profits, anticipating price coming back down near your entries if you entered at these levels. All right, and then when you're short, you see all these red candles come in. You would anticipate price would then come back up to recover those red candles. All right, you see there's none up near your entry above the 50, giving you added confluence. All right, once they've come in at lower volumes, that's okay, because the retest or the retrace back up to recover could then form the subsequent lower high, which it did, to come back down and recover the previous green candle. I mean, you guys see how this works. Green candles come in, red candles come in to recover, green candles back up to recover the red candles back down to recover the green. You start to see how they move price. All right, that's why I use the lower time frames to understand and identify probability of my trade direction. Okay, to make sure my trade is continuing in my desired direction instead of just going to a higher time frame and hoping the candles get bigger. Okay, I say that all the time. That's what I mean. I don't just want to hope the candles grow bigger. I want to understand that price is going to go and continue in the right direction based off where the volume comes in key areas. All right, that's how we do it. When we enter a trade, we don't want to see red candles near our entry because we anticipate price coming back near our entry, which we don't want, to recover the red candles and thus putting us in a position to make a decision under duress while our P&L is shrinking down towards the red. Okay, so that's the vector candle recovery. All right, guys, you can see it. We can go back in the charts anywhere and see it. Okay, doesn't matter where. Take a look at the next section over. Okay. What do we see? Let's squish it together so we can see all the candles. Okay, price comes up, starts forming these green candles on the way to the high. Price comes back down. Red candle recovers green. Price immediately goes back up to recover red, forming a green, drops back down to recover the green. You guys starting to see the trend? Leaving behind a little tinge of green down here, right? Market makers didn't forget about that. They dropped down. They formed a low. Trap some traders, stopping volume comes in, stops them out real quick, and then goes back up towards the upside. Okay, red candles coming in, red candles coming in, getting recovered. Again, almost to the dollar. Red candle comes in, recovered. Red candles come in, recovered later. Okay, guys, you start to use these to identify trade direction. The lower the time frame you go, the more information you get about trade direction. Okay, green candles come in, that leads us into our next price action. Doesn't matter, like I said, how far you go back. The story remains the same. Let's take another look at another section of the chart. Red candle comes in, immediately recovered by green, right? But now we have green candles to recover near our entry. So when price rises up, we are mindful to take profits because we anticipate at some point price coming back to recover the previous green candle near our entry, which it did, almost to the dollar there, and then finds support at that level, pin through, close above, retest. Okay, green candles come in, recovered. Red candles come in, recovered. Okay, you guys see they form these positions and then recover them over and over and over again. All right, go back to here. Let me come out a little bit, right? So we have red candle come in to the downside, swing it across, right? What do we see? Boom, recovered with the big green candle to the upside, right? Price drops down to the lows, comes back up, pins up, recovers the previous position, snaps back down to the 50 for the retest before continuation to the upside. And like I said, we go into the next level. Let's go back one more section just to go over it one more time. Okay, doesn't matter where we stop. Let's use this for an example. Okay, what do we get? Green candles to the upside, we form the lower high, price drops. All these red candles come in, okay, and then what do we see? Price comes back up to recover, okay, to the dollar, all right? So when we're coming in here, when price drops down, when you see notable volume coming to the downside, that's when you start looking for longs, okay? We're flipping our mindset. When you see notable volume to the upside, green candles, we're not thinking long anymore. We're setting up for a short because we anticipate price coming back down to recover, which it did and which it does. Same thing here. Price came down, boom. By the time this price action happens, you already missed the move, okay? Could you FOMO and it could be a huge dump? Yes. All right, but remain disciplined because that is not the rule. That's the exception, okay? When a FOMO works, that's the exception, not the rule. Stay disciplined, all right? So when you start seeing all these red candles to the downside, you're not looking to short anymore. You're looking for a long, anticipating price coming back up to recover the red, which it did, okay? And then continues to the upside, continues to the upside, continues to the upside before dropping down. But what do we see? Okay, we want to see these controlled moves. Green candle, recovered. Green candle to the dollar, recovered. Green candle, recovered. Green, recovered. That's how you want to see it. Red, recovered. Red, recovered. Red, recovered. Slow controlled move. Volume, recovered. Boom. Down, recovered. Okay, that's what you want to see. You want to see these slow controlled moves to the upside and downside. Okay, guys, look, it doesn't matter how far I go back in the chart. It's always valid. Okay, price breaks above the 50. Look, all these green candles. Okay, we look for shorts. What happens? Price comes all the way back down and recovers all the way down to this blue candle. Again, I mainly focus on green and red. Okay, but if there's a blue in the area and price recovers it, I consider the area done. All right. We're looking for slow, controlled moves like this. Red candle comes in, recovered, no big deal. Look, red, recovered, retest the 50, no red, no red. Red here, price comes back up, recovered, still a lower high. When we're shorting, we want to see the recovery of reds be a lower high. When we're long, we want to see the recoveries of green be a higher low to continue the trade direction, okay? To continue that zigzag pattern, all right? That's what we see. Like I said, no matter where in the chart you go, when you start to see red candles come in, you see a reversal to the upside. When you see green candles come in, shortly thereafter, you get a reversal to the downside. Okay? And we look at it on the higher time frames as well. It's all the same. All right? We'll go over that real quick. I don't want these videos to be crazy long. All right? But look, you understand it's the same thing. Green candle come in, recovered. Red candles come in, recovered. Green candles recovered with red to the downside, off the 200, retrace up, recovered. Green candle comes in, drops back down, recovered. Red candles come in, recovered. Green candles come in, recovered. I mean, guys, if you shorted after all these green, then you're adding in the confluences. Remember, that we're just looking at the recovery right now. All right, in the later videos, when we start to add in the confluences and the scopes and the support and resistance levels, then you get your entries. Okay, this is where I started with the basic hybrid strategy, like Trader's Reality, right? Just talking about price coming back to the 50, which you see it does, and recover these candles, which you see it does. Okay, but there were no entries, always waiting for confirmation. But where's the entry? Okay, this time it was 2 green candles. This time it was 1. This time it was 4. Okay, this time it was 4 pins to the high. This time it was 2. This time it was 2. This time it was 1. This time it was 3. This time it was 1. This time it was 5 pins to the low. This time it was 2. This time it was 1. This time it was 3. Okay, it's always different. All right, waiting for confirmation. But by the time the confirmation comes, you already miss half the move. Yeah, rise, retrace, continue. What, you're entering here? Okay, I'm waiting for confirmation all the time, but I needed entries. So that's where I added in my support and resistance levels and zones and the VWAP to the strategy, okay? And the rest is history. You guys see the success, okay? You even see other channels starting to mimic this strategy as well, the combination of all these tools, because it is gold, I promise you guys. All right, you're going to get the why behind price action. That's what I learned. I understood why. They were inducing and trapping traders. They were recovering previous zones. They were reverting back to the mean, being the moving averages, in order to induce and trap new traders. All right, volatility is our friend when you understand it. It's an ATM. Something like this is an ATM. Short, short, long, short, long, short, long, short. Okay, profit after profit after profit. This is Ethereum, right? Shorting back to the 50, 2%. That's 32% on my leverage. Green candle, shorting back to the 50, another 32%. Okay, this is just one session. Green candles to the upside, just back to the 50, almost 2%. That's about 28%. Okay, red candles break to the downside. Now we have red to recover, just to recover the red, another 32% win for me. Green candles to the upside, just back to the 50, not even all the way down. 1.5, that's 24% win for me. Green candle to the upside, just back to the 50, 1.3, that's about 20% win for me on my 16x leverage. Okay, you're starting to see the trend here. And that's just back to the 50, guys. Red candles to the downside, all right, just back to the 50. Take another 2.5%, that's 32, that's a 40% win. Just for price coming back to the 50. Okay? You're starting to see the trend here, guys. Even the small trades. Price comes up, lower high, back to the 50, just back to the 50. 1.5% on 16x leverage. That is a 24% win. Okay, guys? And this is just one session. All right? That's just one session. All right? ATMs are ranges. Okay? So that's vector candle recovery. This is PVA candle recovery. We use it on all time frames, because it tells us the where and the why. Okay, the where and the why. That's what I call it. This is the where and the why, and the support and resistance levels, and the VWAPs and the different levels and points of control. That's the when. Okay, so now we have the why, the where, and the when. All right, to make the highest probability trades. We understand price is going to come back and recover these previous candles. Another reason why I use these lower time frames, because we get quicker recovery. We are day trading, guys. All right, not scalping. We're hoping for price to break the 50 and continue down to recover more green. Okay, but we're taking profits at the 50. We're locking in the win. Okay, short, lock in the win. Stopped out in profit. No big deal. We were up 25, 30% at the 50. Okay, short, take profit. Stop loss, hit in profit. Short, take profit. Hit a take profit too at the 50. This time at the 200. This time we hit 2 take profits. Stopped out in profit. Short, hit another take profit. Stopped out in profit. Short, hit another take profit. Win after win after win after win. And we're going into the next trade off of a win instead of a loss like we used to. Our attitude and confidence are on another level. Okay, granted, yes, we want price to break. We don't want to just have it come back to the 50 and stop us out in profit over and over again, but we'll take it. It's wins. It adds up in your P&L, and it adds up, more importantly, inside you, in your confidence, in your mind. All right, we're looking for big trades too. Back to the 50, ended up coming up here. All right, this would have been a reverse scope or scope extension of the move here. Okay, that's where you would have had probably take profit 2 and then a take profit 3. You hit 3 take profits here on your long position. Okay, and you're still in it. All right, might have ended up taking another profit somewhere up here. Okay, so in this strategy, this is what we're doing. We're long here. We hit our 2 take profits, maybe 3. We're letting it run until price retraces back down. All right, down near the scope extension to recover this previous green, where we would look to add to the long position. 800 EMA, scope extension of the move, recovery of all the previous green in the area, adding confluence to equal confidence. All right, but in the meantime, we've hedged short what? 1, 2, 3, 4, 5, maybe 6 times. While we're still in the long position, we have hedged short. We've lost nothing on our long position. We are just hedging the retraces. Eventually, price will come down. If we get stopped out in profit on our long position, our short has now already hit 3 take profits as well. Okay, and then we start hedging long until price breaks up and stops out the short in profit. And we use these vector candles to find zones for take profit levels because we know we have the where and we have the why. All right, we know price is coming back to recover these previous areas. And then when we see them lining up with multiple levels of support or resistance, we take our profits there because those are where the highest probability of finding support or resistance and bouncing back towards our entry, guys. All right, so that's vector candle recovery. We go over this. This PDF is just simply going over everything so you can see me talking about each specific thing live right now on the charts. All right, now that you guys have had, this is what the PDF is for, so you guys can see what I'm talking about. And now when you come to the streams, you can understand everything I'm saying as we put it together. In later videos, this is an early video in the PDF, guys. In later videos, we will be talking about everything together. But we will be doing, until we get there, we will be doing piece by piece by piece like this. Okay? That's vector candle recovery. I'll see you in the next video, guys. Until next time, trade well.